Alright guys, so the madness is ramping up once again, and if you think the chip war is on a lull, better think again. Beijing has had enough and they don't want US semiconductors flooding the Chinese ecosystem. Now can you imagine China allowing their industries, AI accelerators, and even their military to be powered by US chips? And that would be simply unthinkable. China wouldn't accept it, definitely not doing a trade war. Now, China's internet regulator has banned their tech companies from buying Nvidia's AI chips, and because of that, Nvidia shares fell by 3%, which makes sense. Around 1/8 of Nvidia's revenue comes directly from China. And this is a $50 billion market, and if the doors close, this will be the ultimate loss for US chips. Chinese tech and manufacturing will only grow bigger and bigger. Now, if Nvidia doesn't get Chinese firms hooked onto their stack, the dependence can't be built. It could be the H100 one day or Huawei's chip tomorrow. So Jensen's plan just got cooked by Beijing. Now, this part is important. Several Chinese companies indicated they would order tens of thousands of the RTX Pro 6000D. Now, I guess the regulators didn't like that. They believe domestic chips are comparable to Nvidia's models in China and they clamped down hard. So now it doesn't really matter if Nvidia chips are really better or not, they can't be bought. Now, a few days ago, we touched on how Chinese big tech companies are borrowing billions to grow their AI business. And this means more data centers and more AI chips are needed. Now, Beijing definitely doesn't want this money to flow to US tech companies. They rather allow the money to go to Huawei and Capricorn, local chip producers. So blocking revenue to Nvidia is critical to win the chip war. Now, Jensen's RTX Pro was built specifically for robotics and real-world applications, and that is exactly the advantage China has. The market is huge. Losing it means losing access to major industries of today and major industries of tomorrow. Now everything is grinding to a halt. Companies including Alibaba, they have to stop orders for the RTX Pro. All testing will also stop. Now part of this is for national security reasons for sure, but the bigger agenda, the real agenda, is to prevent a complete monopoly of chips by the US. Beijing doesn't want Chinese money to fuel US chip advancement. Now, China's plan is really simple: develop local companies to displace US tech presence in the country. And boy, are Chinese companies running faster than ever before. Now, Huawei has unveiled their AI chip roadmap to bury Nvidia, at least within the Chinese market. And it all has to do with their superport cluster designs and AI accelerators. Now, this sounds quite complicated, and let us simplify things. Now, just think of the superport as a massive bunch of Huawei Ascend AI chips or MPUs strung together, and they can link together more than 15,000 units for AI processing. And the advantage is humongous. It future-proofs Chinese tech in the event another US ban comes, or if China decides to cut away Nvidia forever, the Chinese AI ecosystem won't starve. Let's make this even more simple. Huawei has found a way to make all those chips talk together as a single giant brain. And these superpods are like Lego bricks that can be scaled from the thousands all the way to the millions. So even if Nvidia has the latest cutting edge chips, China has found a way to bridge the generational gap. Stringing a bunch of Ascend chips is enough to beat Nvidia, and chances are it's probably going to be much cheaper as well. Now, should this work, Chinese companies won't have a need to import Nvidia chips. They can just get it next door from Huawei and not face any government scrutiny. After all, making chips in Shenzhen is gonna cost much less than fabricating them in the Arizona desert. Doesn't take a genius to figure this one out. So, what are the implications? Nvidia has no choice but to rely on the US market. And to ensure there's still money, Trump, he's going to squeeze the world for investment dollars. He's not going to forget about the hundreds of billions pledged by Europe, Korea, and Japan. The world's biggest chip market is about to be closed off. Now, AI is going to change everything and not in a fantastic way. The US better brace for impact. China isn't going to bail them out this time. 41% of US companies intend to lay off employees thanks to AI over the next 5 years. Youth underemployment is also up, hitting 17%, the highest since the pandemic. Now, this could be solved if US chip companies dominate global sales and supply. If the world fuels their AI ambitions using American tech, then chips can be the new oil for Trump. But with China closing their doors, this changes the entire equation. This isn't Penguin Island, it's the biggest consumer of chips and the world's industrial giant. The ban is a big blow to the entire US semiconductor industry. But let's go one step further. The shock coming out of China isn't ending anytime soon, and this time it isn't some big directive from Beijing, but from the currency war. Now, firstly, the landscape against the dollar is just horrible. The world knows the currency is getting debased, and global investors they're trying to protect their assets. And this sets up huge pressure against the greenback. The world is trying to hedge against America, and that means a 1 trillion drag is coming for the dollar. Now, sure, investors are buying US assets, but they are also shorting the dollar using instruments like options and futures. As we mentioned before, if the S&P goes up by 10% and the dollar falls by 10%, it means squat. As a foreign investor, you did nothing but waste time. So hedging against the dollar is very necessary. Now, asset managers are predicting the $1 trillion wave hasn't even hit yet, and that's only 3% of total US assets held by foreigners. There's $30 trillion still unhedged out there. And here's the $1 trillion question. At what point will foreign investors be pissed off enough to start betting heavily against the dollar? Because not everyone is suffering equally. The S&P today is up by nearly 13%. Now that sounds great, but if you convert the gains back to the yen, they are up by only 6%. It gets worse for the British pound, up by only 4%. And in euros, the result is disastrous. If you're an EU investor, you would have lost 1% in the S&P. You might as well have bought euro bonds or gold. And that's how dangerous US dollar assets are for investors. So at what point will global investors throw in the towel? Maybe they want to ride the wave of endless government spending. But to stay safe, they will have to sell the dollar down, which ironically will spike US domestic inflation. And the story gets worse. Global investors are running out of time because Chinese exporters and companies they are on the verge of dumping dollars as well. Now, if the Chinese onshore yuan reaches the 7 to 7.1 mark against the dollar, we could see a tsunami of dollar selling. Chinese exporters would dump 300 billion of foreign currency back to the RMB. Why? Because there's simply no need to hold dollars. These exporters they make their stuff in China, which means they pay the RMB. If the dollar falls by another 5 or 10% against the Chinese currency, they will be in trouble. Now, this is not some big conspiracy we need to unravel. It's the trade war that is screwing the dollar. And if this continues, BANS will need to create a mountain of stable coins to drive artificial demand for the greenback. And if you think that is bad enough, Trump just signed a new work visa order that's going to hammer the US economy. It's not just US markets that are getting closed off, now the entire US labor market is under siege. Now, Ludwig and Trump are going to ring fence US jobs, especially the higher paying ones. Of course, this is going to cause a lot of problems because there will be a big boomerang effect.
No more will these big tech companies or other big companies train foreign workers. They have to pay the government $100,000, then they have to pay the employee. So it's just not economic. If you're going to train somebody, you're going to train one of the recent graduates from one of the great universities across our land. Train Americans, stop bringing in people to take our jobs. That's the policy here. $100,000 a year for H-1B visas, and all of the big companies are on board. We've spoken to them about the gold card.
They love it. They love it. They really love it. They need it.
Now, I'm all for the idea of protecting local jobs to a certain degree. However, the US is an economy built on global talent, especially when you are trying to compete with China. Doubly so when you're in a trade war. Firstly, the cost of labor will rocket up. Companies will have to pay the federal government 100 grand a year for all those H-1B visas each. And here are the companies that will face a lot of pain. Now, amongst the top 10, we have Amazon, Conexon, Google, Microsoft, and Intel. Some of America's biggest tech names are here, and there's a reason why they're hiring foreign labor. There is a shortage of labor where the pool of US talent just can't fill yet. Now, these tech firms have to either start firing people or grind their international hiring to a halt. Trump has now trapped himself in a dilemma. If he imposes this, we can expect global retaliation. Plus, will foreigners come to US colleges and universities? Now, one big lure is to work in the US after graduation, but now that is under enormous threat. Here's how crazy things are getting. Trump might actually do a Taco Tuesday on this one if the markets continue to rebel. If he goes full steam ahead, sure, he can raise over $60 billion per year, and that's a lot of money that he can use to reduce the deficit. Now, it's still a drop in the ocean, but better than nothing. But that would cripple many US companies, especially big tech firms. We can already imagine engineers and talent moving elsewhere. Definitely, some will head back to China as well. Now, option 2 is the lesser of the two evils. This will apply to only new applications or 85,000 people a year. It will raise $8.5 billion, which is a nothing burger to be honest. But this H-1B visa tax is serious. The damage has already been done, and people are realizing that the US wants to shut everything out. It's not just consumer markets being weaponized, Trump is now trying to squeeze money from the labor market. And this raises problems, doesn't it? Will there still be demand for students coming into the US? Now, relations with foreign countries will also get crushed. This is important because it will withdraw how labor will move and shift across the world. The majority of H-1B visa recipients are from India, almost 75% of them. The next biggest holders are workers from China, over 12% of H-1B visas. Canadians and Koreans are next on the list. Now imagine where the labor will have to shift to. Of all the economies in the world, only China is big enough to eventually absorb the best of these talents. Local Chinese talent will likely remain in China. We'll also see more countries send people to Asia to work as well. The biggest winner of this H-1B visa disaster is Beijing, especially in technology. And just like the tariff war, there will be big consequences down the road. Countries are now importing more from China, and this visa debacle will start to drive more students and more talent towards the east. So hang tight because the US probably just played themselves again. Protectionist measures might have worked decades ago, but it's not feasible in this global economy today. But let me know what you think. Will China lift their US chips ban? And will global investors continue dumping more dollars? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.